This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Process change. Businesses, organizations try to improve. We know from the value chain that businesses comprise a number of processes: inbound logistics, operations, outbound logistics, research and development, and the like. If a business wants to improve, it should be trying to improve the processes that comprise what the business is doing overall. And we have to look carefully at how to change, what changes to do, and the like. The first slide here deals with a kind of a classification of change: automation, rationalization, and business process reengineering. And these are really terms which describe the degree or almost the seriousness of the change. So automation is the least serious. It means doing automatically what was always done by hand or manually. It's not really changing very much. You'll get accuracy improvements, you'll get speed improvements, it may be cheaper, but it's fundamentally going to be the same. So an example of this is where maybe stock in a supermarket goes to less than reorder level. So there you are, you're scanning out the goods at the checkout. The machines are keeping track of how much jars of coffee and so on are there. And when it goes past the reorder level, then out goes an order automatically now to the supplier. Previously, someone would have had to write out the order. It would have been done manually. So we're getting considerable increases in efficiency. But it's still the same process. Rationalization. Now you might think that this supermarket ordering, reorder level, stock less reorder level, automatic order, there's going to be no improvement on that. But think of the suppliers. Here you are sitting and suddenly kind of randomly over email or actual real mail come in orders out of the blue. And suddenly you have to start maybe manufacturing goods to meet the orders, and maybe you have to certainly start dispatching the goods. There's an element of delay within that. Would it not be much better if what happened is that the supplier monitors stock? At the supermarket, give the supplier's IT system access to the supermarket's inventory system, and the supplier can sit there watching their stock go down, seeing how quickly it goes down or how slowly it goes down, and they can anticipate when an order is needed. And then you give them a freedom, when it gets down or you see you getting down to reorder level, dispatch the goods. And it's going to be much more efficient. They can plan production, they can plan dispatch. There's much less chance of there being stockouts because we're waiting on inventory. And then we have the most radical of all, business process reengineering, almost rethinking, perhaps from the bottom up, how to do something. There is no hard and fast distinction really between these. Some people would look at just-in-time inventory and say this was essentially a rationalization. Some people would say that just-in-time inventory is so radical that it comes into business process re-engineering. The famous tale told about business process re-engineering was Ford Motor Company. They have a big factory, still I think have a big factory in Detroit. That was their head office. And they had a huge, what they call an accounts payable department. These are the people who essentially, the orders were there, they would wait on the goods receipt notes coming in, they would be kind of paired together, and then they would wait on the invoice coming in, and you would check the invoice, the goods receipt note to the order, you check all the prices, you add up all the invoices, you would probably credit the payables ledger, and then eventually you would ensure that the cash was paid. And the reputation is that they had about 400 people employed in this. These were essentially people employed on matching bits of paper. Not very much value added there. And then Ford had the radical idea. They said to their suppliers, don't send us invoices. We know what we've ordered. We know the price that we've ordered. we know whether or not we've got the goods, and 30 days later we will pay you. And immediately this kind of dispensed with a huge amount of paper matching the invoices to the good receive note and looking up price lists and so on. And the 400 went down to about 40. Now you can't do that payables process in every country. In many countries you've got VAT, sales tax and so on, which you have to account for. But it was possible to do it certainly in Detroit, in their big factory. How do we find where we might actually have some possibility of process improvement, redesigning the process? And one of them is here, reengineering, zero-based. Really, you're saying to yourself, knowing what I'm doing now, if I could start again, where would I put my factory? How would I organize things? So maybe 30 years ago you started your factory in the center of town, and now the rents are quite high, you've outgrown the space, it's very hard to get lorries out and in, the parking restrictions are very difficult and so on. And you're really saying, if I had my time over again, I would build this factory out of town near good motorway communications. And that's what we'll aim for. Now obviously that can be very expensive, it is very radical, but at least it gives you a kind of picture of the perfect world that you might have, and indeed some businesses do close down where they are, move radically across the country, even to other countries, and almost make a fresh start. Simplification, eliminate duplication and redundant steps. We'll see this particularly very soon if you have a lot of movement of inventory or movement of information between departments. When you move information, somebody has to write the information, it has to be transmitted, somebody receives it, has to read it, has to interpret it. All of these movements, there's usually two people involved. Similarly with inventory, moving between departments, somebody has to pack it and count it or whatever, ship it across, somebody has to unpack it, count it, put it away in the stores and so on. Two people involved in the movement of inventory. If you can remove these redundant steps, remove duplication of effort, you're going to find some gains. Value-added analysis, remove non-value-adding activities, and the big one to think about there is inventory. Many businesses have got lots of inventory sitting there just in case. It's not that they're guaranteeing a fantastic service, we always have got of inventory, anything of that sort, but it's kind of just sitting there, taking up space, taking up finance, and the way you might improve the process is moving at least towards a just-in-time inventory system. And finally, gaps and disconnects. Check the flows of information or materials between departments. This is to some extent kind of linking with that one there a little bit. Every time you send information, there is a chance that it goes to the wrong place or doesn't get picked up by the recipient. Similarly, every time you send goods from department to department, there is a delay, there's a chance they're going to get damaged. They may be kind of shoved behind some other goods, they may get lost and so on there. Again, it's potentially very inefficient. So these are the what are called the patterns that we might look for to try and squeeze out, identify some potential improvements. Next, we can look at a categorization of change, and this has been at least hinted at in a question. The examiner talked about the nature of change and talked about the scope of change. First of all, the nature of change here. You have this incremental, which is a kind of a gradual piecemeal change, up to Big Bang, which, as you might think, is kind of everything changing at once. And then we have the scope of change here. Over here you have a very large scope. So this would be changing maybe your IT system, because really very many stakeholders are going to be affected by that. Lots of people within the company, maybe customers, maybe suppliers, are going to be affected by the efficiency and operation of the IT system. Maybe if you go from cost leadership to differentiation, that is a very fundamental transformative type of a change, a large scope change, or it could be very limited. So maybe in the production department, what you do is you bring in kind of automatic kind of clock cards, machines people can scan in as they come to work, scan out as they go away. Again, there is a change, but it is limited to one department, and if it doesn't go well, damage is limited. In the transformation, if it doesn't go well, a lot of damage can be done to many stakeholders. And these 4 words are put in here. And how do we remember what these 4 words are? And I think of the top 2 here is really coming from biological terms. We can talk about animals adapting. So if the climate is getting warmer, maybe the animals slowly move up the hill a bit to stay cool. Or maybe it favors very slightly the lighter coloured animals, which can reflect the sunlight better. So, or maybe their diet changes very, very slightly to make use of whatever sort of berries grow in the hotter climate. But it's basically the same animal, just adapted slightly to its new environment. And then, of course, in biology, people talk about evolution, which is a very large change. Essentially, they would say an entirely new kind of creature emerges from evolution. And you can remember these because basically both adaptation and evolution are slow, incremental. So slow, small change is adaptation. Slow, large change is evolution. Down here, revolution is relatively easy to remember. We know what a political revolution is. It happens very quickly usually, and the whole country tends to be affected. So it's revolution. And all we have to do then is remember the 4th one here, reconstruction. I have no particularly easy way of trying to remember reconstruction. What's the point of these 4 terms being put on change, or to categorize change into these 4 quadrants? And I think it is predominantly to do with risk. If you're down a big bang, there is quite a bit of risk. Risk could mean, or could arise from, turning off your existing IT system at the end of one week and turning on your new IT system at the start of the next week and hoping it works. And obviously, if it doesn't work, you are in big trouble. And if it's an IT system which is affecting the whole organization and many, many stakeholders, you're in really big trouble. If it's an IT system, maybe on your scanning of people's swipe cards to register their time, it's not great, but at least the damage is limited because the scope is relatively small. When you're up here at the slow changes, if we say that down here there's very high risk, up here there's rather lower risk. And there's lower risk really because you're going slowly, you're kind of feeling your way a little bit, and maybe if something doesn't go quite right, you can kind of reverse it a little bit. You haven't gone down a kind of one-way street too much. Obviously, the scope of change, if it's very large here, even going slowly is going to be slightly more risky than if the scope is limited in some way and we go slowly in a small change. So really looking at the effect of the types of change, the scope of change and the nature of change on the risk associated if those changes go bad. Now, whereas this categorization of change slide really just described the nature of changes, a little bit of help maybe in risk, whether or not you actually want to undertake a high risk revolutionary change or whether it's something you want to avoid. The next slide, Harman's process strategy matrix, is actually of much more use in suggesting the type of changes that might be appropriate. And it looks at two things here. It looks at high strategic importance. So think of high strategic importance as something which is really affecting your core competence. And over here, something which is of low strategic importance is what I call a kind of necessary evil. So over here, your core competences, okay? Over here, your necessary evils, things you have to do, but they don't particularly generate any profits for you. And up the side, we have complexity and we have volatility. So complexity, how complex is a process? Volatility, how rapidly does it change? And the suggestions about what you do are as follows. And let's put some concrete examples on this. So let's look at this one here, where you are having essentially a necessary evil, but the process is quite complex, quite volatile. And here the idea is to outsource it to an expert of some sort. And this is exactly the sort of thing that people do, for example, with their tax computations. If you're in part of an international group, then you're right. And they will probably change every year as different countries bring in different legislation. You'd have to be a really very large company to have a tax department big enough and expert enough to keep up to date. So what many companies do is they outsource their tax computations either to their auditors or to another firm of accountants who are tax experts. We go down to the low volatility, low complexity, and again a necessary evil. Well, here we could maybe be talking about your receivables. So issuing invoices, debiting receivables ledger, waiting for cash to come in, crediting receivables ledger is something which hasn't really changed for hundreds of years. It's a very low, not at all volatile, and it's not complex either. So this is exactly what you would automate. One of the first things everyone wants to automate is a receivables ledger, or indeed another similar one would be wages and salary. Or what you can do is outsource it. You can outsource your receivables maybe to a factor. You might remember factors from F9. A factor is an organization, often part of a bank, who will administer your receivables ledger and often advance you some cash before the customer actually pays. Because the strategic importance is low, you can outsource. You're not giving away any great secrets. But note that outsource does not appear in the area here where there is high strategic importance, where we're dealing with core competences. Why would anyone want to outsource an area of core competence? This is giving away really the secret of their success to others. You want to keep that in-house to protect it. So, examples down in the bottom here, in the automate here. You have to think hard about this one. It's of strategic importance. It's really a secret of our success to some extent, but it is capable of being automated. And I think in here, maybe airfares. You know that if you go to an airline site or a travel site and you look up an airfare and then you go back tomorrow, it's probably changed. And what the airlines are doing is they're judging demand for their seats and they're trying to entice the extra person on at the maximum possible margin revenue. But they have to be careful also they don't get into a pattern that people can predict. If we always saw prices kind of going down in the last 2 hours before the flight took off, simply to fill the vacant seats, because that margin revenue is better than nothing, then of course we'd all wait till about 2 hours before the flight and hope for the cheap seat. So airlines are quite secretive about the algorithms they use to adjust the prices, because if it ever was released to the public, or at least to a competitor. So Lufthansa could look at what British Airways is doing, or going to be doing, probably for its seat prices. You can begin to game the system. You can second guess it and so on. So Lufthansa would want to hang on to its method of revenue management. BA would be very jealous of its own methods of revenue management and so on. They need to keep them secret, but also it has to be automated. You can't have people saying, now seat 5A has been taken, we'll put up the prices by $5. And then at the top right, something which is of strategic importance, but highly complex, and maybe, and I apologize, I'll go back to it again maybe, is the process of design, and maybe Apple. You can't really design, you can't really automate a design process. You don't want to tell other companies how you go about designing new products, because to design a new product, certainly in Apple's case, is a major event. Great secrecy involved before they launch it and so on. And you wouldn't subcontract it, because once you subcontract the secret of their design mechanisms, yet exactly how do they get them through trials and test usability and generate ideas and so on. How do they have that considerable imagination going on here? If you outsource that, you'll be telling other people the secret of your success. So you want to keep that inside. So you improve it bit by bit, or maybe you go for business process reengineering, a more radical improvement to this strategically important activity. Strategic alignment. What is strategic alignment? And it's really the process of changing, in a way, linking, maybe by changing an organization's structure, its resources and competences with its strategy and its business environment. So if we have decided to go from cost leadership, cheap hotels, to upmarket hotels, then the resources we have, for example, have to be changed. We would have to maybe improve the rooms, the decoration. We'd have to make sure that the bathrooms were more luxurious. We'd have to maybe install bigger televisions and so on within that. We would have to have different competences in the restaurant, because people going to a 5-star hotel expect very good food. And therefore strategic alignment is just making sure that all the bits and pieces needed to fulfill that strategy are in place. Process change lifecycle. Now this is here because it came into the syllabus relatively recently. What is the process change lifecycle? We've seen different types of change, automation, all the way through to business process reengineering and so on. We've seen changes which are revolutionary, we see changes which are evolutionary and so on. But for each of these, no matter how major, there is really a single life cycle. And first of all, what we have to have clear in our minds is, what will the change achieve? There is no point in change for just the sake of change. You must have clear objectives about how this is going to improve the company in some way. It might be enabling the company to cut prices or reduce costs. It might enable the company to react with greater flexibility to customer needs. But there has to be an objective for the change, otherwise kind of why are you doing it? You analyze existing activities. So if we have got shortages maybe, or delays in supplying of sales to customers, our objective would be to improve the delay, if you like, shorten the delay in delivering to customers. We have to analyze how we're doing it at the moment, identify problems in the existing system to see if we can find some flaws, some difficulties that we could adjust. Then we design a new or improved process. It might be new IT, it might be new paperwork, it might be having different training for people on the phones when they're promising delivery. It may be arranging your warehouse in a different part of the country or splitting one big warehouse into several different areas. But you have to have some plan, if you like, a design of the new or improved process. And then look at those and think which is going to be the best one to hit our objectives. Having redesigned a new process, then you're going to develop it. If you think we need better software, you have to basically write it. If you think we need to train people on the phones better, then you need to send them on a training course. If you think we need to split a great big warehouse into 3 warehouses scattered throughout the country, we need to do that. And that's basically the development stage. And then we have implementation, getting people to use the new software, maybe moving people from one warehouse, relocating them to 3 warehouses, and so on. And of course, people, when it comes to the implementation of the change, may resist it. They may not want to learn new tricks or new jobs. They may not want to move through the country. And then what we need to do, once it's settled down for a few months and we see how it's working, all the problems kind of ironed out of it, we review the result. And we see, has delivery time to customers actually improved? Have we hit our objectives? And if we haven't hit our objectives, then we have to consider going round the loop again. We also have to consider maybe hitting the objectives is going to be so expensive that maybe we ought to actually change the objectives in some way. But a review and a potential kind of iteration of this here as we gradually go towards a better system which hits the objectives that we want. Puppet, people, organization, processes and IT is again a relatively new addition to the syllabus. It's really very simple. All it is saying is that when you're changing an organization, maybe there are these 4 elements that you need to look at. You need to think about the people. Have we got the right people, the right number of people with the right skills? Can they interact properly with customers and so on? Do we have enough of them? Are they in the right part of the country? We're coming on to human resources in its own section later, but people, a very difficult area to actually get right. We have to see the processes. Are the processes working smoothly? We saw how we could maybe improve processes back here, process change lifecycle. And if we're going to be improving how the organization does, almost certainly we're going to be paying attention to these processes. We have to think about the organization itself. Tall, narrow, wide, flat. Should it be divisionalized? Perhaps what sort of management should we have in there? Should it be very dictatorial or more participative? Is going to be there as well. And then we should have in the middle here, we should have IT. IT is increasingly important. It's more and more difficult to run a good operation without adequate IT. This will include record keeping, include ordering, include internet and the like. Internet, very, very important nowadays, very important in the syllabus, but IT as a whole is important to get right if the organization is going to be operating properly. Now, swim lane diagrams. A common, relatively common type of question that the examiner gives is he writes out a process. It could be the receiving of an order, checking of credit, dispatching of goods, something like that. And he writes it out in a narrative form, and then he accompanies it with a diagram, a supporting diagram called a swim lane diagram. And it's called swim lane because you have in each of these lanes here really a different department. You don't have to draw one of these. These swim lanes are given to support and make it easier for you to understand what's in the narrative. And he says, improve the system. And there's, it's very open-ended. There's no guaranteed way of improving the system other than looking for, in a way, stupid things which are maybe done in the wrong order or which maybe don't need to be done at all. And the second thing you can look at is every time stuff moves from one swim lane to another, one department to another, there are two people involved. Whether it's information or goods, one is a sender, one is a recipient. There is delay within that. Goods can get lost, damaged, information can get lost, and so on. So if you see lots of transfers between departments, you might look for simplification. Could we keep the product with information in one department and keep that pretty satisfactory? So here, we look at this, we get the order from the customer, we prepare the dispatch, we do a credit check, the goods go back to sales where they're verified, they go back to the warehouse where presumably they kind of dispatched out to the customer, and some sort of copy dispatch note is sent to the accounts department who raise an invoice. And we look at that and we just look for, as I say, kind of stupid things or movements which aren't needed. And the first kind of stupid thing I would suggest is if we get the order from the customer and prepare the dispatch, and then we check the credit, we might have to unprepare the dispatch. We'll put goods from the shelf into the box. Oh dear, they failed the credit check. We'll take them out of the box and put them back on the shelf. It doesn't make sense. So maybe what we should do is, as soon as we get an order from the customer, we do our credit check. And if the credit check is passed, we won't do this little arrow in here anymore at all. If the credit check is passed, then it is safe to prepare the dispatch. That's in the warehouse. Why do we need to send the dispatch, the box if you like, to sales? I know you want to check that you sent the right stuff and so on, but could that not be done more efficiently and more easily by a second person in the warehouse? So why instead of kind of sending it back there, why don't we just have goods verified here? So we simply go like that. This wouldn't be in here at all. So the order goes through to credit check, goes back here to prepare the dispatch. The goods are verified in here, and then they can be dispatched directly, really, from the warehouse to the customer. And we've certainly eliminated two transfers of goods, one from warehouse to sales and one from sales to the warehouse. And we have a more logical order in which we're actually processing the sales orders. So don't be frightened of it. It won't get much harder than that. It gets a bit bigger than that. But we're looking for improvements at the same fairly basic common sense sort of an area. And then we have, finishing here with just two little slides, funny little area, commoditization of business processes and outsourcing. I'm not going to say a lot about it, but we have already had a kind of a bit of a theme in the syllabus that the modern trend is to outsource. The hollow companies that we talked about and so on. The idea that we look after our core activities that we are really good at, and we outsource the necessary evils, if you like, on Harman's grid. And that's relatively easy if the business process is very well defined, or if you maybe get somebody to manufacture a component. Manufacturing a component, you can very closely define the specifications of that component. If, however, you're asking somebody to run your IT department, in other words, a very complex business process, what do we mean by the phrase run my IT department? Do we mean that you have to update the software, write new programs and so on? To what extent are you going to have virus checkers and firewalls and the like? How often are you going to take backups? Are you going to have remote machines in case of some disaster which is going to happen? There are many kind of variations, if you like, in many of these processes. Similarly, if you say to somebody, I want you to run my human resources, what does that entail? Are we talking about recruitment? Are we talking about doing the annual appraisals? Who's going to do maybe the interviews where you're kind of reprimanding somebody, the disciplinary interviews and so on there? Is all of that going to be outsourced, or only some of it? And all we're saying here is that until we talk a standard language, until we know what's meant by run my HR department, then if we put it out to 3 different companies, they come back with 3 different prices. We're not necessarily safe at choosing the lowest price, because the lowest price supplier might be doing less. So what we're looking for here is, in a way, standardization. If we can standardize the language here, then what you're doing is you're really turning it into a kind of commodity, something which can be safely bought on price. So you send it out to 3 potential suppliers, they reply with 3 prices, but because things are standardized, it's pretty safe to choose the one with the lowest price, because they're all, in a way, promising to do the same. And once you can buy on price, then the prices will be coming down.